lesson, we're going to look at specialization and exchange. So now that we've looked at the decision-making process, we're going to move forward and talk about some specific applications of this and some more advanced topics within economics. So specialization and exchange is getting the most from the limited resources we have. And we already know that we have scarce resources. We live in a world of scarcity. We know what resources are: productive resources, land, labor, capital, entrepreneurship. We've identified those. And so we're going to talk about how to get the most from those. And we often refer to specialization and exchange as getting something from nothing or pulling rabbits out of a hat. So it's a little bit of magic here, and it's really a great way to understand why we do what we do and how we produce and how it is that we benefit from this type of exchange. So here's our standards, our objectives for this lesson. We're going to talk about the principle of exchange, how specialization creates wealth, and why voluntary exchange creates wealth. The problem we have is the problem of scarcity. Resources are limited. People can't have everything they want. And as a result, it's important to get the most from our limited resources. And we ask ourselves, as we're making decisions, is this the best use of our resources? So this often presents a problem to us as we're making decisions, because we might ask ourselves, is this the best possible use? Here are some questions for you. Do you make your own clothes? Do you make your own bread? Do you make your own computer? Do you do your own plumbing? Do you do your own teaching? Do you make your own butter? Do you make your own coffee? All of these things are questions about things that you probably would rather not do yourself. And because you have alternatives, chances are you prefer the alternative to these things. But these are good questions to ask, because you might think, why don't I do these things? And what we have to recognize is that the alternatives that present ourselves to these activities are all about exchange. Why don't you make your own clothes? Because it's probably a better use of your human capital to devote it to something that you have expertise and skill in, rather than gathering the resources and using your human capital to sew clothing. Now, some people have the skill, that's wonderful, but for most people, you have the alternative of purchasing it ready-made, which is more appealing, and as a result, making your own clothes is an activity that is, in your opinion, most people's opinion, better left to someone else. All of these things can be said about making your own bread. Now, some people are going to look at this list and go, yeah, I do those things, and that is wonderful. But for the most part, we don't do these things for ourselves because we prefer the alternative of letting someone else specialize in those things and exchanging with them. So this leads us to the magic of exchange, or the idea that one person's trash is another person's treasure. People specialize. It allows us to do the thing that we have the lowest opportunity cost for producing and exchange it with somebody else. So this is a lot of syllables and words around this concept, but this is what we do. We don't make our own bread or clothing or butter or coffee because we can use our skills to do other things and exchange with people that do have a greater ability to do those things. I wouldn't make my own clothing because I would rather leave it to somebody who has all of the resources to make clothing at a lower opportunity cost than me. For me to make clothing would be a tremendously high opportunity cost. I would have to allocate my human capital to learning the process, to going through the process of trial and error, to making many, many ugly things, and then finally maybe arrive at a reasonable looking piece of clothing. But it makes a lot more sense to allow somebody to specialize in this. And for me to specialize in something that I can do at a lower opportunity cost, giving up less, and exchange with the other individual. And this is true of most of these things. Even if you can do some of those things, you probably don't always do it. So people specialize and then exchange. And this voluntary exchange that we engage in makes us better off. It creates wealth. So remember, our definition of wealth is our subjective evaluation of well-being. So voluntary exchange makes both parties to the exchange better off. People exchange goods of a lower value for goods of higher value in their estimation. So nobody's getting ripped off in this. This is voluntary exchange where both parties view what they're giving up as lower value and what they're receiving as higher value. And this is where it becomes kind of magic, because the value that we assign to things is subjective. Notice that the word value here is in quotes, because value is in the eye of the beholder. And you've heard the expression, one man's trash is another man's treasure. Anybody that has ever been out to a yard sale has seen this, that somebody's giving something away or selling something, and when you see it, you might perceive it as having great value, and they don't see it the same way. So that difference in perceived value is the basis for trade. The principle of exchange is an important one. It says that people exchange if they expect to gain more than they give up, if the benefit, in their estimation, exceeds the cost. Remember, that's from the perspective of the decision maker. All of these things are personal and determined by the person making the exchange. So there's some great stories we have that explain this. One of the great stories that you're going to see, it's attached in Blackboard, is Mama Provi and Senor Rivera in Mama Provi and the Pot of Rice. And you'll see in the story there are several exchanges, and Senor Rivera is one of the many exchanges she makes. But notice as Mama Provi is going through her journey up the stairs that she encounters many people and makes many exchanges. And in every case, both parties, Mama Provi and the other person, are made better off by the exchange. And both people anticipate to be made better off. And that might be a little counterintuitive. You might look at this and say, well, no, there can't be. There has to be a winner and a loser in exchange. And the magic that we're talking about here is the idea that both parties are better off. It is a win-win. And so when we engage in voluntary exchange, the principle of exchange tells us that both parties anticipate being better off, and both parties make the decision based on that anticipation, and both parties end up being better off, which might seem impossible, but as you'll see through the stories and through other examples of this principle, it is definitely true. So that's why we call it magic, pulling a rabbit out of a hat. The apple pie story, and this is how to see the world and how to make an apple pie and see the world, is another example of exchange benefiting both parties. And this is a really fun story. There's a lot of applications you can use in your classroom, food related and exchange related and just geography. It's got everything in it. It's a great story. And again, you can look for how the principle of exchange reveals itself in the different exchanges, the anticipation of both parties that they'll be better off, and the benefit to both parties in the voluntary exchange. So we say this, voluntary exchange creates wealth. People are only going to be willing to exchange if they expect to be better off. This is true of every exchange you've ever made in your life. When you were in the second grade and you sat down with your brown bag lunch at the table, you looked around and you and your friends started to exchange. And you started to trade because you expected to be better off. And you might have traded something that you didn't think had value with a friend who they thought that what they had didn't have value. Both of you, through the exchange, get something that you consider more valuable, and wealth is created. So it can be seen in so many different ways, but this is such an important principle, foundation of understanding trade and economics. So people will only exchange if they expect to be better off, get something of greater value than what they're giving up. because we evaluate goods and services differently. When I sit down at lunch, what I see the value of in my lunch bag is different than somebody else's. Because it's subjective, we're going to have different valuations. Therefore, that's our basis of trade. Wealth is, by definition, the subjective evaluation of our well-being. And so with full and equal knowledge, every exchange is going to increase wealth because it's going to make the parties better off. Some examples of this, you and the candy won't make any sense. Gasoline, when you go to buy gas, you might say to yourself, well, I have to, but realistically, you buy gas because you want to, and you expect to be better off for having the gasoline than the price you pay. Now, you may grumble about the price, but gasoline still makes you better off when you purchase it. And when you make the exchange, you make it on the principle of exchange, that you value the money you're giving up as less than the value of the gasoline you're receiving. The same is true of your student fees, medical costs that you may incur, and books that you buy for school. All of those things you anticipate to be better off than, or the value of those things, you anticipate to be more than the money you exchange for them. So specialization then in production helps create this wealth. When people specialize in the production of a good and service that they can produce at a lower opportunity cost than somebody else, they can make themselves better off and create wealth. It's about efficiency. It allows them to be more efficient, to use less resources to get the same output, because they're doing so by producing something that they can produce at a low opportunity cost and exchanging it from somebody else who could produce that thing that they want at a lower opportunity cost. So this is kind of an abstract concept. It's good to see in action. Here's an example of how we can see this in action. This idea that if two parties specialize and exchange, they can both be better off. So here we've got a cabinet maker who earns $50 an hour making cabinets. This cabinet maker takes 3 hours to make a cabinet. It takes her 2 hours to mow and rake her lawn. Over here we have a high school student who earns $10 per hour, mowing lawns generally. It would take this student 20 hours to build a cabinet and 3 hours to mow and rake a lawn. So we've got two different scenarios here. And at first glance, you might say, well, gosh, the cabinet maker is better at both things. They can do both things faster and better than the student. Maybe the cabinet maker should just make cabinets and do her own lawn, and she would be just fine. There's no way that she could benefit from this lower skilled high school student. And this is where the magic of exchange can be viewed. So let's do some calculations here. Let's see what it would cost the cabinet maker to do her own yard work. So if she were to do her yard work, it takes her 2 hours to mow and rake her lawn. If she worked those 2 hours on her lawn, she's giving up the cost of $50 an hour. She's giving up $100. So the cost of the cabinet maker doing her lawn is $100 because she would have spent those 2 hours in her second best alternative, which is cabinet making. And so as a result, she gave up the $100 she would have earned making cabinets for those 2 hours. Our high school student, if they were going to make a cabinet, would take 20 hours. They would have spent those 20 hours mowing lawns at $10 per hour. So the cost of making a cabinet for our high school student would be $200, what they gave up in order to allocate those 20 hours to cabinet building. So here's where we can do the comparison then. Well, if the cabinet maker were to pay somebody to do her lawn, she would pay the high school student, right? Who could do it in 3 hours at $10 per hour. So our cabinet maker would pay $30 to have her lawn mowed and raked. Our high school student, if they were to purchase a cabinet, they'd have to pay the cabinet maker for their 3 hours to build the cabinet at $50 an hour. So the high school student would pay $150 to buy the cabinet ready-made. So what you can see very readily here is that the cost is lower for both parties to specialize and exchange. So we can see those values again reflected here. And what we can see very clearly is that the cabinet maker, by specializing in cabinets and paying the high school student $30 to mow the lawn, they gain $70. It would have cost them $100. They pay $30 instead to the other party to specialize. The high school student, instead of using their 20 hours to build a cabinet, they can use it to earn the money selling their labor at $10 an hour and buy a cabinet for $150. Therefore, the student is better off by $50. So both parties gain from this exchange. So if you're not sure about the numbers, here we go. Doing the yard work would cost the cabinet maker $100. They can pay $30. Building the cabinet would cost the high school student $200. They can pay $150 instead. So if each party specializes in what they can do at the lowest opportunity cost because they have skill and they can provide it at a lower cost, they can exchange and both parties be better off. And this is important because you might often look at individuals or even nations and you might say, well, we're better at doing things than that country. Why would we trade with them? They're weak. They're not as powerful as us. And the fact is, there's a benefit from specializing in what each party can do at a lower opportunity cost and exchanging. This is a really sophisticated principle. It works its way all the way through economics. It is the basis for trade in the world today, international trade. It is a big concept, so it's an important one to understand at every level. We call it the law of comparative advantage. In exchange between two parties, no matter who they are, individuals, nations, businesses, you name it, even if one party is better at both activities, both parties can benefit from specialization and exchange. You notice that in the previous example, the cabinet maker was better at both activities. And you might think there was no benefit to be gained from exchange, but there was, even when one party seems to be weaker than the other. Now, another fun story, really fun story, to illustrate this principle of exchange and the idea that we're better off when people specialize and trade is Cook-a-Doodle-Doo. This is the most fun ever. This is appropriate for any age level. You'll love this story. And you'll notice that each of the characters specializes. And you can go through this with your students. You can use the recipes. And you can talk to your students about why specialization made everybody better off. And you can ask the students to identify what turtle specializes in, what iguana specializes in, and what pig specializes in. I think you'll really enjoy the story. So to recap, specialization and production and voluntary exchange create wealth, right? So those two things together make us better off. Specialization and production is more efficient. It gets more output from our limited resources. It's the magic that makes us both better off when we do what we can do at a lower opportunity cost. The exchange creates wealth because of the subjective evaluation of value. And so that's the magic. The rabbit that is pulled out of the hat is the wealth that is gained when different people value things differently. We can extend this to a look at history. Open trade throughout history has always been a value of our government. It was written into the Constitution. In our Article 1, Section 8, they discuss trade as a foundation for making our nation better off. The term capitalism is never used in the Constitution, but we do have a system that facilitates capitalism by having open trade. Capitalism is simply the exchange, the free exchange between people. So open trade is a big part of that. It benefits consumers. It gives us more alternatives. It gives us better prices, better quality, and we all benefit from competition. among different people trying to engage in trade with us. Other nations have adopted a more open view of trade. We have trade partners now throughout the world. The European Union has gotten more open with trade. This is something that has really become more of a global phenomenon. There are lots of discussions today about open trade, how some people are hurt and helped by different trade agreements. NAFTA has since been replaced, but still trade agreements do have some good and bad aspects to them. Sometimes jobs are sent to other countries. That's called outsourcing, and it's generally seen as a negative. But we also have the balancing to that, which is jobs that are brought here through these trade agreements, which is insourcing, generally good for our economic outlook, but not often discussed. We almost always focus on the negatives of outsourcing when discussing trade. There are some that advocate for the protection of American jobs through tariffs and taxes. And that protection, as you can imagine, has costs and benefits. Sometimes to protect a job, it can cost up to $90,000 per job saved. And you might ask yourself, is that worth it? How about protecting tobacco farmers and sugar producers? And we talk about protection through different measures, and we're protecting domestic producers against foreign competition using taxes, tariffs, quotas, anything that keeps the market benefiting the domestic producers. And you might ask yourself, is this worth it? Is it the best use of our resources? Should we open trade more? And these are all policy discussions that are ongoing, but it's worth connecting the world around us today to an understanding of this idea that specialization and exchange make us better off. So this is something you can always evaluate and appreciate, understanding how specialization and exchange create wealth, and then you can expand that to your understanding of policy issues around you.